Hello guys, it's been a while here. You're welcome to my YouTube channel. This is Synthetic Goddess. Right, in this channel we share strategies that will help you grow in the financial markets, even if you are a beginner or you are just starting out. So this channel is going to help you build strategies and simplify the strategies for use so that you can make profits in the financial market. All right, so today in this video I want to talk about inducement. Okay, and this is why a whole lot of traders get stopped out. They get stopped out often from the market, and eventually the market will move in their way and they get frustrated at the end of the day, saying the market, their analysis are actually correct, but the market stopped them out before taking them out. What we'll talk about inducement is just an enticement from the market. Inducement is an enticement from the market that signals for you to buy or to sell early. So that is why we have early buyers and early sellers. Eventually it takes out the early buyers and early sellers and still move in their own way, and that is why a whole lot of traders just lose their money, they blow their accounts, and they get frustrated at the end of the day. So here I want to simplify this and then give you ways so that you can analyze the market correctly, and then you can see from the market perspective, not based on what you're thinking, but based on what the market is giving. When we talk about inducement, like I said earlier, it is an enticement from the market for you to either buy early or to sell early. And inducement does not just work on its own. You have to follow the structure. You have to follow the current structure of the market. So you have to know the structure of the market before you make use of inducement. You have to know the structure of the market before making use of inducement. So here what we're going to do first is that we're going to get to know the structure of the market. After getting to know the structure of the market, then we are going to look out for our inducement high or low. So if we are in an uptrend, we are going to look for our inducement low, the low that will be induced, okay, where a whole lot of people will be buying, and it will take them out and still buy. So I'm going to be using volatility 50 index, and I'm going to be on the H1 time frame to explain this. I'm going to be on the H1 time frame so I can explain this, and then you're going to understand better. You can see it on other time frames. You will see it on other time frames, but I'm going to be using this one here to explain so that you can get the key points I am trying to bring out. So inducement, yes, we are in an uptrend in this case on this volatility 50 index. Meanwhile, on the higher time frame, basically our last break of structure is to the upside, so we don't have anything to fear over here because our last break of structure is to the upside. So definitely we are looking for a buy move. On the daily time frame, the last break of structure is to the upside, so looking for a buy move is actually joining our trend, joining our 1 hour trend, our daily trend rather. So looking for a buy is not bad. We are not trading retracement, so this is giving us assured, it's making us rest assured that we are joining the trend and we are not just trading the market anyhow. And on this H1 time frame, we had a break of structure to the upside. We had a break of structure to the upside on the H1 time frame. This is our break of structure to the upside. We've been trading to the upside, yes, according to trend line the market is to the upside. So yes, we are in an uptrend. We have a break of structure over here, we have a break of structure here. So this is higher high and this is our higher low, and after we broke this high, we had this structure inside, which means higher high, then a new higher low. Now immediately we break this higher high, once we break this higher high, this is our new inducement. So when market takes this low, it simply means we are not considering this low as a break of structure. We are not considering this low as a break of structure. Immediately we have a break of structure to the upside. Immediately this move happened. This move to the upside, this impulsive movement. We are considering this low as our inducement for this whole structure. We are considering this as our inducement for this whole structure. But immediately we had a break to the upside. The market came back. It did not come here. It did not come back to our previous structure. It did not come in. So we had another break of structure to the upside. Meaning our inducement has changed. Immediately we have a new break of structure to the upside, and this place is also untested. So we have a new break of structure to the upside, meaning this is a new structure on its own. So this is our new inducement low. This particular low is the new inducement low. This is the new inducement low. This was our previous inducement low after we broke this high. This is our new inducement. This is our inducement low after we broke this high to the upside. So if market comes back, taking this low, we are not considering it as a break of structure. We are considering it as an inducement until we break another structure in between here, until we break an internal structure. But the market did not come back. It did not come back into this structure. So it just had a little move, then started moving to the upside. So meaning we have a new inducement. Our inducement is shifting from this low to this low based on the fact that we have a continuation trend. So if we are looking out for any low the market should be taking, it is this low, until the market does something like this again. When the market does something like this and we do not break that low and break this high again, that is when we are going to be considering this low as a new inducement. So when we have a break of structure to the upside, this is our break of structure to the upside. Now we have a series of structures here, but I'm starting the explanation from this place. We had a break of structure to the upside. After the break of structure to the upside, we created a new higher high and a new higher low. Now, once we break that higher high, immediately we break that higher high, this is an inducement for this structure. It is an inducement for this structure. So once the market breaks this low, we are not considering it as any break of structure, but we are considering it as an inducement. So whenever market moves to the upside, the first break of structure, the second break of structure, that low that formed at the second break of structure is what we use as an inducement. Now I'm going to use a downtrend for explanation over here. I'm going to be using a downtrend for explanation here so that you can understand. Let me use a perfect downtrend. Let me look for a perfect downtrend to use as an explanation. Okay, this is a good downtrend over here. We have a low, higher low, we have a lower low, lower high, then we have this to the upside, then eventually we broke the low to the downside again, giving us a break of structure. So it simply means our high over here is an inducement based on the fact that we have a high, a low, then we have a new lower high, a new lower low. We have a break of structure to the downside. So this is where we are considering as our inducement. Why do we consider it as an inducement? A whole lot of people have seen that we had a break of structure to the downside and they are considering to sell from this point. People are considering to sell from this point, and that is why the market uses an area like this for inducement. Immediately it used it as an inducement, the market continued to the downside. The market continued to the downside, and you will always see that everywhere. I made an analysis on volatility 50 yesterday, and yes, I think it was on the 15 minutes time frame, and it was here. It was here. We had a break of structure to the upside. We had a break of structure to the upside. Now, after we broke the structure to the upside, we have a new break of structure to the upside again. To the upside again, we had a new break of structure to the upside again, and after the break of structure to the upside, market did not really induce any low. It did not induce any low here. Basically, we are in an uptrend over here. The market did not induce any low here. So before breaking to the upside again. Now, immediately we broke this high. After we broke this high, this is our inducement. If market was going to induce, this is our inducement. So we'll just be looking for a buy around here. But the market did not induce, rather it broke another high to the upside. It gave us a minor structure and broke another high to the upside. And after it broke the high to the upside, remember I am always saying, whenever you want to trade, look out for the PO high that sponsored a retracement. Look out for a PO high that sponsored a retracement. This is a strong PO high sponsoring a retracement. So definitely I am expecting an inducement from this area. The market is going to want to manipulate. The market will want to manipulate. So after we had the break of structure to the upside, where is my inducement low? This is my new inducement low. I am expecting the market to induce this low because that was the last low. That was the last low. So if market breaks this low, I am not expecting, or I'm not calling it an inducement. I'm not calling it a break of structure. Rather, it is an inducement until market breaks this low. That is when I am considering a break of structure. When market breaks this low, that is when I am considering. When market breaks this low, that is when I start considering a break of market structure. But basically, the market did not break this low. It rather took out the inducement. After taking out the inducement, we had a fly up. We had a move to the upside. And basically, when market takes inducement, whenever you see a market take inducement, it has a way of moving, like a very sharp move. It will give a very sharp move to the upside, and that is it. So we had another break of structure here. We had another break of structure here. This is a new break of structure to the upside. So around this place, we had a new break of structure to the upside, then another break of structure, then another break of structure. We had another break of structure. So I am considering this low as my inducement low, but markets did not take this low. It only gave me a small retracement without coming into this place. So we had another break of structure again to the upside. There was another break of structure to the upside, meaning my inducement has shifted to this place. This is my inducement here. This is my inducement. It has shifted to this place. So we had another move to the upside. The market did not come to take the inducement before breaking another structure. Meaning all the PO highs that has been sponsoring that retracement, they are not strong PO highs. They are weak PO highs that has been sponsoring that movement, and that's why we don't have a take of inducement. We don't have a break of inducement. So after we broke this to the upside again, this is my new inducement low. This is my new inducement low. I am not expecting the market to take this low, but when the market took out this low, I am considering it as my short-term break of structure, to the downside. So I am looking for a sell move, a little sell move, then to an area. I'm looking for a little sell move to an area immediately the market broke this low, because this is supposed to be the inducement. Market is supposed to continue around this area, but market did not continue around that area. We had the break of structure to the downside. So we're expecting the market to come back to an area where it has not tested, where the market has not tested. That is where I am expecting the market to come. So for inducement, you're always looking out for two break of structures. Now, assuming we are in an uptrend, we are looking for a break of structure to the upside, the number one. We are looking for a break of structure to the upside, the number two. Now, the low that's pushed up for the second break of structure is our inducement. That is our inducement, and that is what you're going to be trading. Now, I hope you understand this strategy, and I hope you've grabbed something about this inducement, and then you won't get taken out anymore from the market. You start using your inner eyes to see and then watch inducement, and then play it according to how the market is playing it with you. Please stay safe in the market. This is December. Stay safe in the market, and I wish you a profitable week, month, and year. Take care of yourself. Bye, guys.